Hello everyone, my name is Gregor and welcome to our new video update Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro-dollar, cable, dollar-yen, S&P 500 futures and silver. So as you know, markets are in strong risk-off mode. We are finally seeing the S&P 500 breaking this support, this low from 2022. So we are now officially in a bear market that may resume much lower into wave C. Now wave C is a motive wave, so we should expect more weakness until we see the 5 sub-wave structure down from this 4,300. And if you look closely here, I think that was wave 1, wave 2, so you should expect more weakness after wave 4 rally. So for now, US dollar still should remain strong while we are in the risk-off mode. However, keep in mind that we are here in a wave C, potentially final leg of the higher degree counter-trend movement. So later this year or in 2023, we'll be expecting a potential stabilization. We are seeing currently VIX picking up, meaning that there is more and more fear, which is normal when you see S&P 500 or all stocks breaking to new lows of the year. I mean, German DAX is probably headed towards 11,000, if not even lower. So for now, we are still in risk-off mode, but as I said, we could be in these final lags, which still can be extended or bigger before potential price stabilization. However, everything is connected obviously with inflation, or more importantly with hawkish central bank policies. The ECB members just noted that they are looking for further hikes in the upcoming meetings, meaning more pain is most likely coming, especially on the stock market. So if DAX, S&P 500, others will continue to the downside, I think that euro dollar should stay in downtrend as well. However, there can be a potential fifth wave unfolding, but even this fifth wave should be made by 5 smaller waves. So I think that there is room for 93 around there in the near term, but in the short term, even if we rally here, watch out for this resistance to hold around 970. It can be the ideal swing zone for wave 4, since wave 4 could still be here, maybe in play as a potential expanded flat correction, or maybe you are still this in an extended wave 3. If I need different letters. If I label the subwaves like this, then obviously this still can be wave 3. So in either case, I think that this resistance around 97 is very important one, and as long as we are trading far away, that's clearly a downtrend continuation. Now let's take a look also on pound. Now pound has experienced some capitulation on Sunday, despite some positive decisions from finance minister in UK, who said that they are working on plans for households to have or to save more money, meaning that on the long run their plan is actually that they will support the economy. So for now, however, investors, speculators saw this as very pessimistic, especially when you have these stocks breaking down hard across the board. However, Bank of England may try to stabilize the currency with the hawkish remarks, but so far that's still unsuccessful. Now looking at the longer term picture, we are facing and testing this 85 lows from 85, and potentially even making this throw over formation with a big wedge pattern. So despite very aggressive sell-off, I still think that maybe later this year, next year, we could be trading much higher, maybe even put in a significant low here, because this current sell-off reminds me to something that we have seen even back in 2000, back in 2016, back in 2009, and even here back 93, 85. These are all very similar price actions, so very strong moves to the downside. So pound, based on history, can very quickly recover afterwards, but of course it may take a few months before we may potentially see this happening. Now let's take a look also on dollar yen. Now dollar yen keeps moving higher. there were some attempt of a strong Japanese yen versus the US dollar, but this is a very hard play, especially when you have Bank of Japan, in the other hand, talking about easing policy and that they will stay in this phase for now, while on the other hand, they are still talking about potential intervention. So this intervention happened, but it's usually when you have these contrarian policies, usually it's only temporary. You still have a very strong US dollar, you have higher US yields, and this is what is driving the dollar yen higher. So I think the dollar yen still has a room for further upside here. I'm looking for potentially even 148, which is 161.8% extension of this latest wave 4 that completed a flat correction. And up there, notice that there's also this parallel channel, which is actually taken from waves 2-4 line, and I put it at the top of the recent highs here, and this could be the same projections. Well, I think that 148 could be very important or attractive, at least in the near term, is because that was the same levels when we look back here 1998. So here also massive Bank of Japan intervention occurred, and afterwards we have seen a strong sell-off. So I think that maybe Bank of Japan will try to be much more aggressive whenever we approach these levels up here. Okay, now let's take a look also on the final market, which will be silver. Now metals, obviously they have hard time staying bullish. Silver, however, was doing quite well despite the recent dollar strength, but since this dollar strength is just resuming with a sharp extended moves, it looks like that silver is now also trying to give up here. And looking here on a daily chart, well, this still hold move can be a counter trend movement. You are in a very good 78.6% retracements, which are normally very important whenever we want to define the end or the swing zones of these completed corrections. Also looking at the substructures of this wave C, well, keep in mind that wave C is a motive wave, meaning it should be made by 5 subwaves. And if you look closely here on the 4-hour chart, if you look closely here, well, I can count 5 waves down, okay, and possibly you are in a 5th wave. And what's even more significant is that 5th wave is showing potential shape of an ending diagonal, of a wedge pattern. And normally when that's the case, normally when you have this overlapping price action after that very deep, strong move to the downside that is now lasting for more than 6 months, whenever you have this overlapping price action at the end of such move, well, normally this indicates that maybe bears are losing strength, okay, because clearly that was a much stronger sell-off, much more extended lag. This one firstly here in May, and then the next one in June and through July. And you can see that now we have smaller and smaller lags, but still within downtrend. However, this type of a price action normally fits or suggests that bears after all can be losing strength, and that sooner or later we will potentially finally stabilize. Ideally, this will happen somewhere around the lower trend line of this wedge pattern, around $16 obviously is the maximum level. Now $16.50, $17, well, that would be ideal for potential bounce. Now when it comes again from an investment perspective, from a trading perspective, as I already mentioned last time when silver made this recovery, well, you always need, or it's good to wait on a 5-wave recovery, okay? And if you look closely here in this substructure, that was not a 5-wave move. It was only a 3-wave move with an extended wave C. So until I see 5 waves move up from a new low, it's very hard to say where we will bottom. I want to see that market will actually show me where the bottom is. Okay, unfortunately we had some very tricky price action here back in July, but I think whenever we get the next very similar price action, this will be much more important and attractive, because probabilities, whenever probabilities for a low in place, will be much more significant and greater when you have another 5-wave rise from a new lows. Okay, Terrorists, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.